Hey guys, Matt Greer here. I'm a realtor in the Phoenix area, and I just wanted to take a minute to talk about some of the pitfalls that I've seen buyers go through when preparing to buy a home, either before they've gotten their pre-approval for their mortgage or after. So I've gone ahead and I've written a few down, and we're going to go over those today, and we're just going to talk about them. Please keep them in mind, and if you're looking at buying a home right now, make sure you don't do these things. All right, so first off, the very beginning of the journey, when you decide that you're going to buy a home, the first thing that you start doing is you start saving up for your down payment. This is important because you're going to need it. Even if you're going to use something like a VA loan, me personally, that's what I use, you still need money for your closing costs. So keep that in mind. One thing that a lot of people overlook, though, is that when they're saving up for their down payment, they tend to run up credit cards or other debts. Don't let that happen. One thing that you want to make sure you're doing while you're saving up is that you're paying off debts, because what this will do is this will lower your debt to income ratio. So what your debt to income ratio is that's just a ratio of how much money you make each month compared to how much you have to spend each month on debts. If you have a lot of debts, that ratio is higher, and the higher that ratio, the less the banks will be willing to lend to you. So while you're saving up, make sure you're also managing your debt, paying them on time, because that's the other thing that will hurt you. If you've got late payments in the past, you're going to have to wait longer because the bank's going to want to see those further and further in the past. So make sure you're paying on time and you're doing everything you can to lower your debt that you have each month. Now, once you've done that, you've saved up your down payment or your money for your closing costs, and it's time to start buying, you get your pre-approval, it doesn't stop there. Unfortunately, there's a few other things, and over the past few years, I've had a few clients, fall for these things, and it's really too bad. So we're gonna go ahead and go over those. I've written them down, and we'll just touch on them briefly. And if you have more questions, feel free to reach out, or you can always reach out to your loan officer. Your loan officer is going to know the most about this kind of stuff when it comes to you getting a mortgage, but your agent can help you out as well. So the first thing you don't want to do once you've already got your mortgage pre-approval is take on new debt. A lot of people think that they've got their pre-approval, they're good to go, things won't change, and then they go and open up a new credit card. Probably the most common one that I've seen, and it's really unfortunate, is when you're at the store and they offer you some sort of discount if you sign up for their credit card. Don't do this. I know the discount might be tempting, but when you take on that new credit card at Lowe's or Home Depot or Nordstrom's, wherever, that's going to show up on your credit as new debt, and the bank's going to see that as an issue. And that right there can stop your mortgage, like in its tracks right then and there. So please don't do that. The next thing that I see people doing, this involves credit cards as well, is maxing out your credit cards or continuing to spend on credit cards or just buying too much. A lot of times what people will do is they're excited to move into their new home, and you want furniture, I understand, and you want it there before you get the home. Do not do this. When you max out your credit card, it doesn't matter if it's a $500 credit card or a $50,000 credit card. The bank sees it as the same. They don't want to see it. Don't do it. So please wait until after you've closed on your home to start using your credit cards again if you have to. The next thing is your job. Your bank sees your job as your security. That is what you're going to use to pay them back their money. Keep in mind, the bank's giving you a ton of money. They want to know that you're going to pay it back. So once you're pre-approved, do not switch jobs, and especially don't switch fields. Now, I know that things can happen, and unfortunately, companies do lay people off, and you might be able to go get another job very, very quickly. And if that's the case, speak with your loan officer, let them know. And if you stay within the same field, it might not be a problem, but do everything you can to stay where you're at until you close. It doesn't matter. If you hate your boss, just stick it out, get the home loan, get the house closed, then change. Once you've changed, you can do whatever you want. Or once you've closed, you can do whatever you want. But until you've closed, keep everything as much the same as possible when it comes to your career. And like I said, if you have to switch jobs, just make sure you stay in the same field. If you do that, the bank sees that as more stable than if you were to completely switch fields. All right. So moving on, the other thing that I see, and this might ruffle feathers of a few people, is don't go with the first lender. Okay. Now, what I mean by that is when you first start looking for a mortgage, some people, what they'll do is they'll just Google mortgages, first bank, they click it, and there we go. A lot of people are afraid to have their credit looked at by more than one bank. And it's understandable. It does affect your credit somewhat when they look at your score. But keep in mind, you're financing a home. This is a very expensive purchase. Don't be afraid to talk with 2 or 3 different lenders, see who's going to have the lowest fees and who's going to have the best rate for you. Because at the end of the day, this is a very large purchase. You don't want to pay too much for the money that you're borrowing. So don't be afraid to look around. When you're doing it, try and do it all right around the same time, because I've seen that does help when the banks can see that, like, oh, hey, this person was shopping around for a mortgage this week. That's why there's 3 different banks that pulled their credit. If you're getting denials, stop what you're doing. But if you're getting approved and they're letting you know what your rate will be, look at 2 or 3, see who's got the best rate, who's got the lowest fees, and go with them. Don't be afraid to shop around. I mean, after all, you're going to come and we're going to look at multiple homes and we're going to find the one that's best for you and we're going to find you the best deal. Don't be afraid to do the same with your loan. I mean, it's a lot of money. Make sure that you're getting the best deal possible. The next thing that I see as well is don't make any major changes to your credit. So this is just like maxing out credit cards once you're pre-approved. And where I see this happen a lot is with people buying new cars, or that's actually a big one. They go and they buy a new car while they're pre-approved. Bank sees that all of a sudden you've taken on another $50,000 in debt and they no longer want to give you a mortgage. The other place where I see this is when people, once again with the furniture, they go to the furniture store, they order their furniture in advance. A lot of those places will allow you to finance because, after all, furniture ain't cheap. Don't do that. Wait until you have purchased the home and you own it before you make any major changes to your credit. Now, another thing with this that might surprise you is if you're making payments on existing loans and credit cards, continue making those payments as you have been. One thing that's happened that's actually stopped one of my clients before, it didn't stop him completely, but it was a setback for sure. It stopped him about 3 months before they could go back and start buying a home again, was they happened upon some money. They actually got a bonus at work. This is great. Normally it won't affect you negatively, but they took that money and they paid off a credit card. Seems like a very reasonable, responsible thing to do, but what happened was the bank saw that and they wanted to know why this major change happened in their credit. Where did this bonus come from? Why did they get it and why did they spend it there? I know it sounds dumb, but unfortunately these mortgage banks, they want to know everything. And when there's something that they can't explain, whether it's good or bad, they stop. They get spooked very easily. So if you're going to do something like that, if you happen across money, if you inherit money or anything like that, talk with your loan officer. Let them know. If you plan on paying something off or making a larger payment than normal, let them know beforehand. Tell them, hey, I've got this money, I've got this credit card I want to pay off. Is that okay, or should I wait until I've closed on the home? If you let them know beforehand, they might be able to play it in your favor. But if you just go do it and you don't let them know and they can't explain to the underwriter how that happened, it can affect you negatively like it did my client a few years ago. The last thing that I want to cover, and this is actually really important and a lot of people don't understand this, is don't assume you need 20% down, okay? If you are trying to save 20% down for a house, I commend you. That is good. But at the same time, home prices are constantly increasing. So 20% for a home today, when you start saving, might not be the same as 20% a year from now. For example, if you were saving up for a home in 2019, you were getting ready to buy, And then over the next 2 years, we had a 40% increase in homes in some areas. That 20% down dramatically increased, and you might not catch up. With a lot of loans, you can actually purchase with as little as 3% down. With some conventional, with FHA, you can do it with 3.5% down. I would recommend getting to a position where you're financially able to make the payments and you can afford a home that you would be happy with. Once you're there, don't worry as much about the down payment. Make sure you have enough, because what's going to happen is you're going to buy that home and that home is going to increase in value. And the nice thing about that is you only pay a small down payment, but when you pay that down payment, you get a home that's worth a few $100,000, and that is what's going to grow. The percentage that it will grow is going to be based off of what that home is worth. It's amazing. It's the best way to build wealth. I know me personally, like I said, I buy my homes with a VA loan. I put nothing down. My first home, I put nothing down. It was $150,000, and the cool thing was is each year it went up in value about 3%. I didn't have to put anything down, and I got a 3% return on $150,000 that I didn't even have at the time. So don't always wait. Make sure you have enough that you're comfortable to buy a home and that you've got a nice little savings in case things happen, to keep you afloat. And then go ahead and start looking. Talk with a loan officer, see what options they have, as well as you never know what sort of down payment assistance they might have at the time. Some of them are actually really good. You should definitely look. You should definitely talk with a loan officer, and don't just sit on the sidelines, because when you're sitting on the sidelines, the home prices will continue to go up, and unfortunately, your money won't be growing at the same rate as it would if it was invested in a home. So I hope that was helpful. If you have any questions, feel free to reach out. I'm going to go ahead and link my website as well as my phone number in the description. Please like and subscribe if you found this useful. I'll be releasing more videos here shortly. And feel free to reach out if you have any questions. If you're in the Phoenix area, I'm out here in the East Valley, I'd be happy to connect and help you out. If you're looking at buying now, or if you're looking at buying in the future, we could help make a plan to get you ready to buy as soon as you can. Home ownership is one of the best things about living in this country, and I want to help everyone become a homeowner. So don't be a stranger, reach out, and thanks for watching.